Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the F&O Qs. I'll talk about the general trade setup, and the SGX Nifty is indicating that 10,700 mark will be hit today. So the SGX Nifty above the 50 rupee mark in trade today at the 10,700 mark. So extremely strong start expected from the SGX Nifty. Even the ADRs, apart from Wipro, most of the ADRs ended in with a positive bias. Be it Tata Motors, Infosys or Vedanta, all of them gained. Wipro was the only one which was down almost 1.5% in trade. But apart from it, decent set of cues coming in from the ADR pack. Now, as far as commodities are concerned, crude opens muted, snaps the 4-day rally. But yesterday, if you're looking at it overnight, WTI managed to rally, hit a high of as high as 65, and Brent hit 70 in an intraday trade yesterday. Oil is all set for the fourth weekly gain as far as this week is concerned. So there is a lot of strong traction that's happening with oil. Now, if you're looking at it, what's happening with the commodity space, you can see that aluminium and copper were rather muted in trade. The big mover was zinc. Zinc was up 1.5%. The other one was lead, which was up. Other one was tin, which was up 0.8%. The big drop came in nickel, which was down almost 2.5%. Even if you're looking at what's happening as far as Shanghai is concerned, it's a mixed set of cues that are happening, and gold is trading with a positive bias currently. Individually, let's talk about Shanghai. So it's been a mixed set of cues that are coming in from Shanghai. Rubber is trading up. Steel and copper are trading down at this point of time. The other cues that you want is gold. Gold trades with gain for the third straight session. You just saw that it was trading with a positive bias. FIs were net sellers yesterday. DIs bought in pretty much much more than what the FIs sold. But on a month-to-date basis, both FIs and DIs have turned net buyers. As far as the sectors are concerned, the Nifty real estate index was up almost 2%, so strong traction seen there. Nifty energy was down almost 0.4%, with one of the worst performing indices in trade yesterday. Overall, if you're looking at the Nifty was up almost 19 points. What contributed? Infosys and the banks. So Kotak Mahindra Bank, HDFC contributed. IndusInd was one of the big losers post the numbers. ICICI and Reliance were the other ones that reacted negatively. But Agam, what are the F&O Qs indicating?
Sure, Darshan. So as you've already mentioned, we've seen the Nifty hang around the mark of 10,650. The SGX Nifty is indicating the mark of 10,700 hitting today. That said, there was very little traction which comes to futures. So very little change there in open interest, and it's the same for the bank Nifty. In fact, we've seen unwinding in the Nifty bank futures at around 1.7% decline there. Moving in terms of the WIX, that continues to trade around the mark of 14. But interestingly, the put call ratio has edged up higher to around 1.74. We have seen a lot of activity in the 10,600 put, where there is more build up. In fact, more writing coming along there, which means this is a positive sign for all those who are long on the market, because there's more writing coming along. This may serve as a near-term support. Moving in terms of changes in the F&O ban, we have GSPL entering the F&O ban. On the other hand, counters such as IFCI and Generation move out of the F&O ban. We have seen a lot of traction in other counters such as JSPL, which is looking at fresh longs, and Granules India is the other counter which moved up quite substantially on the back of changes in open interest, where we saw about near 13% added there. On the whole, plenty of stocks to look forward to, but once again, all eyes will be on the Nifty and whether or not it can move above the mark of 10,700 today.
Yeah. Stock of the day is Shree Cement, in line with expectation numbers coming in from the company along with the acquisition news. To begin with the basic numbers, revenue is up by 23% at a number of around 2,296 crore. EBITDA is up by 16% at a number of 570.2 crore as compared to an estimate of 552 crore. That's pretty much in line. Margins have contracted a little bit from 20 to 24.8% as compared to 26 that we've seen in the corresponding quarter, but that too is in line with our expectation. There's a beat coming in on the bottom line front by a good, the profit has risen by a good 42% year-on-year basis to a number of around 333 odd crore as compared to the estimates. The Bloomberg consensus estimates that we were working with were around 259 odd crore. What has led to the beat is obviously your lower finance cost along with depreciation. And if you look at the other metrics, volumes have come up by 8%, realizations up by 14%. 3% in line, and EBITDA is in the range of 7.3% YOY. We were working with an estimate of 5%. Acquisition bit is the company has acquired a 93% stake in a UAE-based company, which is Union Cement. This is with an enterprise value of around $305, and the capacity of this of the company is 3.3 MTPA. That's the clinker capacity, and overall cement capacity is around 4 MTPA. Acquisition is expected to be completed in the span of next 9 months, and the EV per ton for this acquisition works out to be around $75 per ton, which compares to, if you look at the Indian industry average EV per ton, that works out in the range of $100 and $120 per ton, and EV to EBITDA for this company works out to be 9 as compared to 12 to 13 EV to EBITDA that we're seeing for Shree Cement. But then do note the fact that the dynamics of both these markets play out separately. With this deal, the synergies, the company's capacity is expected to grow to go up to 33.3 million ton as compared to a number of around 29.3 presently, and this is expected to help the company expand its footprint in international market. With that, let's toss it over to Jayesh for commodity market updates.
Thanks for that, Nikki. So oil has touched the 70 per barrel mark overnight, and this is the highest level that we have seen in the last 3 years. Now, this is largely on the back of inventory data that we saw yesterday and demand supply, which is seen favoring oil prices. Now, on one hand, we had Brent, which had touched the 70 mark. WTI also rallied for 4 consecutive sessions as inventories have shrunk in the US. Now, yesterday, we saw that Citi had an target price of about 80 per barrel. On the other hand, today we are seeing that UBS is saying oil prices could weaken over 2018 amid the record US output that we are seeing currently. So that's the contrarian view coming in from UBS. As far as base metals are concerned, we saw mixed trading on the London Metal Exchange. Zinc actually stood out with a gain of about 1.5%. However, Macquarie sees that the peak for zinc prices could come in this quarter. Tin was the other metal which did really well. It was up 2 days in a row and gained almost 1% overnight. Nickel, on the other hand, snapped its 3-day winning streak, down about 2.5%, while aluminium, copper, lead closed marginally lower. As far as Shanghai Futures Exchange is concerned, we are seeing mixed trading once again in all of the base metals. Zinc is trading higher, and on the other hand, we have Shanghai Steel, which is trading lower by about 1% after gaining for 3 days in a row. As far as gold prices are concerned, once again, gold has crept above the 1320 mark as traders are now looking out for the CPI and Federal Reserve cues coming in. What has aided to the growth of gold is the dollar index, which has closed, which was down 3 days in a row and has once again slipped below the 92 mark. With that, let's toss it over to Saloni for currency market update.
Thanks for that, Jayesh. So talking about rupee, it ended marginally lower yesterday at 63.67 levels against the dollar, as traders prefer to remain on the sidelines ahead of the release of key macroeconomic data, which is scheduled for today. According to a Bloomberg survey, industrial production data is seen at 4% in November versus 2.2% earlier, while consumer price inflation is expected to pick up to 5.04% in December versus 4.88% a month ago. Now, on the global front, Asian currencies were trading higher on the back of broad-based dollar weakness, while the dollar index ended low for the third straight session, as it was mentioned by Jayesh earlier. And after the data showed that US producer prices slowed down for the first time in over 1.5 years. Now, remember, the index closed well below the crucial 92 level mark, which is an important cue for dollar index. Elsewhere, the single currency euro rallied against the dollar after hawkish ECB minutes, wherein the policy makers hinted that they may reduce their monetary stimulus program if the economy continues to grow at the current pace. Coming back home, dollar rupee is trading flat in the non-deliverable forward market, which indicates a flat opening for Indian rupee in today's trade. Moving on to bond market, sovereign bonds ended little unchanged, while yields ended steady at 7.44%. And lastly, global funds increased their rupee debt holdings for the 4th consecutive session yesterday. They infused close to 2,100 crore according to NSDL data.
Well, with respect to the stocks that we're tracking in trade today, first off, it's Syntex Plastic on the back of earnings that we're tracking. Weak set of numbers coming in from the company. So if you see the revenues, they fell by 7%, but the net profit doubled from 26 crores to 52 crores. EBITDA also fell about 3%, while EBITDA margin bumped up by about 50 basis points. So while the net profit growth may look good, but that was only on account of a one-off expense of 45 crores in the base quarter, and hence it looks bigger. So weak set of numbers coming in from Syntex. As far as the corporate announcements are concerned, we're tracking Indiabulls Real Estate, which has said that its unit will acquire a commercial building in Gurugram. Now, this will have a leasable area of 2.5 lakh square feet, and they expect the deal to be completed in the next 3 or 4 months. So keep an eye out for that name. You also have State Bank of India, which has said that they will raise about 20,000 crores now versus an earlier target of 5,000 crores via long-term bonds, which will specifically be to finance affordable housing and infrastructure. That apart, we're also tracking Reliance Infra. Now, this is on the back of multiple reports where which say that Reliance Infra has emerged as the lowest bidder for NTPC's 567 crore worth turnkey contract. So we could see some positive reaction coming in on that name. Dredging Corp is another one where they've received a contract worth 89 crores for dredging of channels and basins at the Cochin port. Keep an eye out on that name as well. That apart, we're tracking Amtech Auto. This is on the back of an ET report which says that Liberty House and Deccan Value investors have emerged as the top bidders for the company. So we could see a sharper reaction on this name probably. And lastly, MEP Infra, where its unit has achieved the first milestone for one of the projects that it is implementing in the state of Maharashtra, and for that they have received the milestone payment of 20% of the project. So again, we could see some positive reaction there. But with that, let's toss it to Agam and Darshan, who will be discussing what analysts are expecting from Infosys today.
Well, after TCS, the big number today will be Infosys. What can we expect? Agam, you're tracking this very closely. Firstly, the ballpark numbers, what are we estimating as far as the numbers are concerned?
Sure, Darshan, it's going to be another lackluster quarter for Infosys as well because of seasonality and furloughs. So, you know, it's not any different from TCS. With respect to expectations, we're looking at about 1.6% growth in rupee terms. Margins are expected to remain flat at around 24%. And again, in terms of profitability, we could see a slight decline at a little over, I would say, 3,600 crores. That said, in terms of your dollar revenues too, we are not expecting too much of an uptick. In fact, less than 1% uptick on a sequential basis. Okay. So it's going to be a quiet quarter. Okay.
Guidance is very important. What can we expect as far as guidance is concerned? Is there any change that the street anticipates for guidance for Infosys?
Right, Darshan. So last quarter, the company cut its guidance quite drastically. So they've cut the guidance from well over 6.5% to 8% to now 5.5% to 6% in constant currency terms. So a lot of analysts on the street are saying that it's very unlikely that now there will be any more change in guidance. They're on track to maintain their guidance now, their revised guidance. When it comes to their margins, their guidance for it is around 23 to 25%. They're bang in the middle at around 24% right now.
Okay, so which are the important factors that our viewers need to watch out now once the Infosys number comes out?
Well, again, I will be watching out for how their banking financial services vertical has done. We saw indications given from Accenture, but that's not turned out for TCS specifically. And the TCS management already has said that they are in wait and watch mode when it comes to the banking financial sector. But the good part is that the retail vertical has picked up quite substantially because TCS has seen about 6.5% growth. So that is something that could translate very well for Infosys as well.
Okay, new CEO at the helm, what are the expectations there?
Darshan, this is perhaps the most important data point or variable that everyone is going to be keeping an eye on. What Salil Parekh has to say, what he's going to make of Infosys strategy, whether or not, what part of Vishal Sikka's strategy on automation and digital that he's going to carry forward, and what are the changes that he's going to bring. And now that Salil Parekh has come in, there are some expectations that the top management could see some more changes. Okay. And of course, eventually you will also see Nilekani move out once Salil Parekh is set into his role. So some of these things that we'll be watching out for as we move in.
Okay, my final question is, you already saw the TCS numbers. If Infosys comes in line with what is expected, which would be a better performer?
Well, I would say that it would be Infosys, because we are expecting about 1.6% growth in the rupee terms, and that would be better. And of course, we really haven't seen too much of an uptick with respect to margins in TCS. And again, if Infosys comes with slightly better margins, then it will be a positive.
Okay, so that's the big number that will come out today. Infosys will report numbers during market close, or pretty much after market close, but this is the number that everyone needs to watch out for today.
So in its biggest buyout ever, mobile advertising company and India's first unicorn, InMobi, has acquired a US-based advertising startup, Urserve, for $90 million in a cash plus stock deal. Now, InMobi said in a statement that the deal will help the company to enhance its monetization for publishers globally, and will also solidify its position in the advertising mobile advertising market, where it competes with the likes of Facebook and Google. Now, the SoftBank-backed company, which last year announced to have achieved operational level profitability, said that with this acquisition, the company's video and programmatic business will roughly account for about 35% of its revenue.
This acquisition essentially makes us one of the most formidable platforms in the world on mobile video advertising. And it was one of the capabilities that we didn't have specifically with regards to as advertising moves to programmatic. It was not one of the capabilities that we had. So with the acquisition of Airserve, we actually get that capability and literally combine that with our large-scale presence across the world. And therefore, this is a massive deal.
Based on the cash market volume as of yesterday, watch out for these stocks today. Could see some action. First up, we have Infosys. It was up more than 2% and saw delivery buying in excess of 700 crores. The delivery volume more than doubled at about 66 lakh shares as compared to its 10-day average, and the total volume also more than doubled at nearly 97 lakh shares as compared to its 10-day average. Indiabulls Housing Finance, the other stock to watch out for. It was up nearly 2% and saw delivery buying in excess of 350 crores. The delivery volume surged nearly 150% at about 30 lakh shares as compared to its 5-day average, and the total volume just more than doubled at about 43 lakh shares as compared to its 5-day average. Fortis Healthcare, it was down 8.5% yesterday and saw delivery selling in excess of 125 crores. The delivery volume was up 165% at about 88 lakh shares as compared to its 10-day average, and the total volume too surged about 150% at nearly 2.8 crore shares as compared to its 10-day average.
On the big brokerages, first we have is Motilal Oswal on KEI Industries. Now they have initiated coverage on the stock with a buy rating and a target price of 537, which suggests a potential upside of 44%. Now KEI is likely to be a major beneficiary of the key government initiatives in power, infrastructure and real estate sector. Also, the company is looking to enter into newer markets like South and East India, apart from their existing North and West market. Apart from institutional segment, the institutional segment growth, the company is also expanding its retail segment, which will be a key growth driver going forward for KEI Industries. Now KEI's export division is also expected to report decent number and decent growth because of the strong geographical presence that the company has. Going forward, the current weak working capital cycle is expected to improve along with positive free cash flow. Now the company's margin are expected to improve by 155 basis points by FY20, and the brokerage is expecting the company's revenue, EBITDA and net profit to grow at a compounded annual growth rate of 19%, 22% and 33% over FY17 to FY20. Lastly, the brokerage says that the KEI deserves higher valuation given the high growth expectations along with healthy financials. Second, we have a Citi on TVS, and they have initiated coverage on the stock with a sell rating and a target price of 700. Now Citi expects the competitive intensity in the scooter segment to increase, with players like Hero, Suzuki and Yamaha getting aggressive. Now also the company's weaker presence in motorcycle cycle segment will limit the growth for the company going forward, which means that the company will also not benefit from the uptick in rural demand. However, for the premium bike segment, the brokerage is expecting a significant uptick in the market share. It is expecting the market share to increase to 15.5% by FY20. But when it comes to the three-wheeler segment, it is completely dependent on the export division, according to Citi. Lastly, the brokerage says that the current valuations have priced in the margin improvement but not the headwinds, and there's a very little room for error when it comes to TVS Motor.
Now, there's clearly so much to talk about today, from Nifty results to macroeconomic data, and you'll find all of that right here on Bloomberg Quint Live. But there are also several stories that you should consider reading on the website. That's bloombergquint.com. Here are just a few of them. First up, Walmart is boosting its starting hourly wage to $11 and delivering bonuses to employees, capitalizing on the US tax overhaul to stay competitive in a tightening labor market. Tanzania has ruled that the local unit of Bharti Airtel was originally transferred from the state illegally and will start talks to try to retake what the government says is its rightful share of the business. Bitcoin slumped to its lowest level since Christmas Day as South Korea's Justice Minister reiterated his proposal to ban local cryptocurrency exchanges. That fueled concerns that a state crackdown would erode demand for digital coins in one of the world's biggest markets. Yeah. Now, let's listen to what Sumit Bagadia has to say about the Nifty going forward.
We're expecting Nifty to touch 10,700 levels in next 1 or 2 days. So till the time 10,600 levels are not taken away, one should be on buy side for the targets of 10,700 level as an immediate target. And a closing about 10,700 will take index towards 11,000 levels in next couple of weeks. So overall, markets are very strong. If by chance, because of volatility, if there is any correction, then that should be used as a buying opportunity. For an immediate trade, I think for next 1 or 2 days, one can be on buy side for the targets of 10,700 levels in Nifty. And as far as Bank Nifty is concerned, from here on, above 25,700 levels, we will see Bank Nifty moving towards 25,900 and 26,000 levels. So both the indexes are looking strong to me. I think one should be on buy side for next couple of days.
Well, that's all you need to know going into trade today. What did you think about this show? Do write into us and tell us. And also, don't forget to share if you liked it. Well, let's move on now to Indian Open. That'll start just a few minutes from now, and that'll take you through morning open. That's all we have for you today. Thanks for watching.